Welcome back my friends. Today I'll be talking about how I'm going to build a high growth portfolio and build it in a way that is ready to embrace 2025 and the future. But first, let me put out some disclaimer that everything is based on my own worldview and investing is very personal. If you're new here to the channel, welcome. This channel is about a 26-year-old guy wanting to solve a problem of financial illiteracy of this generation. My goal is to help my viewers build wealth through closing up the knowledge gap. You can help me out by clicking the like button so that this video can reach out to more people. Thank you. Before we know what kind of portfolio we want to build, we must first understand an individual's obligation and risk appetite. Obligation means expenses commitment that you cannot avoid, such as housing loan, car loan, food expense, baby milk powders and diapers, etc. So risk appetite means how much risk you are able to stomach. Whether you are risk adverse or you have high risk tolerance, that is dependent on your personality. Your risk appetite should be lower when commitments and obligations are higher. So as for me, I'm still young. I do not have much financial obligation and I plan to keep things this way for the next 4 to 5 years. Hence, my risk appetite is higher. I'll prefer to take smart calculated risks to maximize my growth. So how do I constantly identify stocks like AMD, Kimley, Tesla options to make money from them? It is all about research and studying the key details and finding for mispricing. For AMD, they have caught up with Intel and their products are becoming increasingly superior to Intel. The demand for GPU, CPU and NPU are going to increase steadily for the next 10 years. Everything is moving to cloud computing and ARM processors could become the new standard because of their performance and cost. As the world moves towards robotics and artificial intelligence, they require neural processing unit to do stuff like deep learning. I'll link my full analysis up here and down below. Kimley is the stock that made me $35,000. So for Kimley, the trend has shifted from commercial to residential. People are spending more on essential stuff because of recession. Government support such as rental rebate and job support scheme reduces the expense. Kimley was significantly mispriced considering that they are going to perform better in a post-COVID world. Yet they were only priced at 20 cents last year. So if you want to check it out, I'll link the full analysis up here and down below too. Today I'm going to share how I'm going to build a high growth investment portfolio that is designed to bring me maximum growth, taking on some form of smart calculated risk. The COVID pandemic is like a reset to all businesses. The tide has changed. Those in airlines, hotels, events are going to suffer badly. The global recession will trickle down to affect commercial properties and most businesses will be affected too because of reduced spending. However, there will be companies or industries that will thrive under this new world order. Industries such as healthcare, semiconductor, supermarket will do super well with this new trend shift. There will also be new markets coming to disrupt existing norms by offering much cheaper, faster and better way of doing things. So companies like Tesla have their hands on AI, robotics, energy storage, electric vehicle, energy production. Blockchain like Ethereum and Cardano will likely change the way we do things as well. I prefer to invest in stocks that I know will do well in the post-pandemic world, or stocks with government efforts or incentive to steer and empower certain industry. I also like companies or cryptos that I see has no issue with demand for the next 10 years. I look for companies that are light years ahead of their competitors, a monopoly with the best products in the market and also the highest profit margin. Finally, I look out for a fixed cost business and see if the company can vertically integrate their products and services. So this is the 3D pie chart I've made to illustrate how I'm going to build my portfolio. There will be 75% in Tesla stocks, 15% in options, 10% in crypto. Let's go through every single portfolio allocation and the investment thesis behind each allocation. So firstly, why Nano? Nano is a disruption to remittance and payment merchant. Nano also has the potential to be a truly digital global currency. So in my opinion, it is the most undervalued crypto with a lot of utility and the best fundamental. The upside potential is much higher than Ethereum, Cardano and Bitcoin. Let's look at Cardano for example. Stakers and stake pool owners are rewarded new coins for locking up their coins as proof of stake. Stake pool owners can get up to 300% per annum in revenue and dedicators can enjoy 6.33% per annum. So new money will have to be injected to pay for this constant dilution of coins. Meanwhile, Nano is fully distributed. There will be no new Nano coins minted. Cardano is also peer-reviewed and developed based on academic research papers. Things take a more methodical approach, but that also means that things take a longer time to move. As for Bitcoin, about 6.25 Bitcoin is minted every day. For Bitcoin to stay above 40,000 price level, $32.5 million have to be injected to buy the newly minted Bitcoin. It is all very sentiment driven. I have 8% allocation for Nano because Tether is a time bomb. I'll link a video up here and down below for you guys to check it out on my full analysis of Nano. Next, we move on to why AMD. AMD have good management since Lisa Su took over as CEO in 2014. There will be steady increase in demand of CPU for the next 10 years. Robotics, AI and deep learning requires a lot of neural processing unit. Gaming industry will get bigger year after year. There is also metaverse, proof of work blockchain, requires a lot of GPU as well. Everything is moving towards cloud computing, and ARM processors is likely going to be the new standard for cloud computing. AMD have the facilities to produce 5nm chip, while Intel is still stuck with producing the 7nm chip. For small positions like AMD, I know the long-term prospect is good, management is good, products are great too. To maximize my gain with a small 5% allocation, I'll be buying leaps, also known as long-term buy call options. Next, why Tesla option? There are many short sellers on Tesla. I can make use of them to take advantage of mispricing. When Tesla is sideways for a long time, I can sell monthly put option to extract time decay, getting some extra cash. When Tesla becomes extremely undervalued, I can buy long-term call option, using smaller capital to get bigger position in Tesla. I'll only use both options when I see Tesla is undervalued. So this will be a 10% allocation for options trading. Next, why Bitcoin and Ethereum? At this point, Bitcoin and Ethereum are like S&P 500 of the crypto world. It is just additional exposure to ride the mass adoption of crypto wave. So this will be a small 2% allocation. Lastly, why the majority in Tesla? I think Tesla is the most misunderstood stock. Tesla is a fixed cost business. The factories are fixed cost. The full self-driving software is fixed cost. How much cars can be produced is constantly being improved through streamlined production, combining all 79 parts into one single alloy. Each gigafactory they build, they correct the mistakes previously and constantly find ways to improve their production capacity. Listen here, Tesla have two vertical integration of both the cars and the batteries. For batteries, they need as much as they can, produced in-house and from suppliers. There's no limit because all the batteries can be put into good use. The batteries can be vertically integrated and priority will be given to the highest profit margin. So batteries will be given priority in this order. So Tesla Robotaxi fleet, high margin cars like Model S with full self-driving, Model Y with full self-driving, normal model like Y and 3, and the remaining batteries for energy storage, because it is the least profitable. For cars, the current situation is the demand is more than what Tesla can supply. Even if the day comes when Tesla can produce more than its demand, the excess cars can be used for making Robotaxi fleet, which is actually the most profitable market. Because the Robotaxi is operated with no driver, no petrol, minimum maintenance, yet it can run all day as compared to a normal driver. Operating a robotaxi fleet is actually much profitable than selling cars to other people. So imagine yourself as a manufacturing factory owner, and I tell you that you can produce as much as you possibly can, and each unit you produce is a profit. You'll be the happiest factory owner. And this is exactly what is happening to Tesla. Engine technology has been around for 100 years and lithium-ion battery is relatively new. The cost of lithium-ion can still go lower through economy of scale, cheaper extraction, and innovation. While trying to solve full self-driving, they realize it is not easy because the real physical world has a lot of obstruction. So to solve autonomy of vehicles, Tesla need to solve real-world AI. So they are close to doing it and will reveal on August 20th on AI Day. My prediction is that they might have solved real-world AI that enables them to get into robotics as well. Other car manufacturers will realize that they are very far behind and might as well license full self-driving from Tesla at this point. So if this happens, Tesla will have a new revenue stream. Tesla also have monopoly on charging stations. I can go on and on, but let's stop here. End of the day, the delivery growth is the most important while they move to their target of producing 20 million cars per year in the future. Tesla will become the biggest company, so 75% allocation in Tesla for me. And that is it. This is how I plan to build my high growth portfolio. This is a long-winded video. I hope you appreciate my effort and give this video a thumbs up. Subscribe to my channel to further support me. I will see you next week.